Alright everyone, Cowboy Trades here and welcome back to the channel for another quick update. So what on earth is going on with the markets today? Bitcoin has got an insane bearish engulfing candle with huge volume stepping into the market right now, and we've also got the S&P 500 nuking below these key trend lines. We're going to talk about all this and more. What is the next move for Bitcoin? What is the next price target? And also, what's the next price target for the S&P 500? Let's dive into our first chart. Now, I really just want to show you the volume that's stepping into these markets to start off with. You can see over on the Bitcoin Tether USD pair over on Binance, there's approximately 334,000 Bitcoin being sold. Now, I don't want to go through all of these, but if you do go through exchange by exchange by exchange and tally them up, we've got just over 500,000 Bitcoin being sold today. So we're definitely seeing a huge step in terms of volume. Bears are taking back control, and as we previously discussed with this big M pattern, which we will revise and talk about the price target of this in just 1 second, we are getting these bearish engulfing candles letting us know that we are going to be getting further continuation back down to the downside. Also, since our last video, we talked about how Bitcoin is going to get to 10,000, letting you know price target by price target, step by step, how we're going to get there. And since this video, we've not only smashed through 2 price targets that we mentioned, we are coming right down to the third one down here, this 4-hour bearish flag price target, all the way down at 20,500. Now, we're literally sitting right above this right now as of the time of recording. We might even hit this by the time I upload this video, but it is not looking good. Now, in terms of the next price target for Bitcoin, if we do just zoom out very quickly and show you where this is, get rid of the EMA ribbons, which you can actually now see. Before I get rid of these, we are falling beneath the short-term moving average. This is definitely not a good sign. This is definitely letting us know that this is probably going to be a fake out before we come back down to new lows. Over on the Heikenashis, you're switching back bearish, and if we pull up this trend line, it's very obvious to see where we are coming right back down to. We're coming right back down to retest this macro trend line around about 20,000 if you're looking at the weekly, around about 19,500 if you're looking at the daily time frame. So really, that is the next move for Bitcoin. Bitcoin is coming right back down to 20,000, 19,500, and when we do come down to these levels, there is going to be an extremely important retest that is going to be taking place. Now, we talked about all these price targets and more yesterday, so I really just want to zoom through these charts and give you a quick update. Of course, we're getting continuation from this bearish divergence that we talked about. It still looks like, you know, coming from the downside of this pattern, that we are really just starting this next move to the downside. On the daily time frame, you can see some of the oscillators maybe looking like they're near a bounce. However, it's probably possible that we continue getting a breakdown before another bounce back up and then continuing to nuke back down to the downside. And this is probably because, if we clear this up, get rid of the EMA ribbons, as we've been discussing on the channel, we do have a beautiful bar pattern with a price target all the way back down at the start of the trend. It's probably likely that we have a bounce somewhere around about here. Bulls get excited and get caught with their pants down once again somewhere around about this range, and then we head down to 16,200 to retest the floor of this bar pattern. So it looks like this move is really just getting started, like we have been warning about, and as you can see, some of the oscillators on the daily are saying that a bounce is somewhere near, and I wouldn't be surprised if we did have a short-term bounce, potentially if we come up to something like the 4-hour EMA ribbons. It's very likely in the next couple of days or so, we ping back up probably to 21,000, 21,500 or so. I think that would be a move that would slaughter the late bears. This would also suck bulls back into the market, and then when bulls get excited, get back into this market, we will of course follow the path of the most pain, slaughtering the late bulls and also slaughtering the late bears rather, and then slaughtering the bulls who do try and pivot back into longs before getting liquidated. However, like I said, higher time frames, this move is really just starting. Stochastic RSI has only just crossed bearish and we're sitting around about 80. We've got a lot of room to move to the downside. MFI is sitting at 65, a lot of room to move to the downside. Squeeze momentum indicator is only just ticking into dark green, indicative that in the higher time frames on the weekly, bear in mind the squeeze momentum indicator is like a very slow moving oscillator. It takes a lot of momentum to make this, you know, swing from a bullish trend to a bearish trend. In fact, you can see this hasn't moved into green territory since all the way back at the bull market top. So When this is saying that bulls are losing control, this is letting you know that, this next move back down to the downside really hasn't even started because we haven't moved into red yet. So on the higher time frames, everything's looking pretty dire. If you switch over to the Heikin-Ashi candles, like we discussed, we are ticking into red on the weekly time frame. But when we do come over to the Heikin-Ashi, you can see these oscillators are even more overextended, and the squeeze momentum indicator on the Heikin-Ashis for the weekly has not actually crossed back down bearish yet. So there is so much room to move back down for this new bearish trend, in my opinion. So what's the next major price target that I've got my eyes on? Well, of course, at the start of the video, I told you coming down to this 20,000/19,500 zone is going to be extremely important to see how we retest that. Now, we also discussed in the most recent video that I personally think that we are going to fail the retest of this pattern and move a bit lower. So looking at this big M pattern right now, and also this is backed up by this bearish divergence, regular bearish divergence, you can see there is another price target down at 18,700. I'm making this video as quick as possible because I really don't want to regurgitate all the information that I spent, carefully laying out in this video yesterday. We made a 20-minute video on Bitcoin, so I really just want to let you know the most important things coming for the market right now, where Bitcoin's coming to retest. We're coming down to 20,000. After then, the next major price target to keep your eyes on is 18,700. After then, the next major price target to keep your eyes on is the floor of this bar pattern at 16,300. What happens after that retest? Oscillators on the weekly time frame are going to be gearing down and having a little bit more momentum before we do come down to these lows. Now, how quickly could this happen? And why do I think that we're probably going to come down to new lows in the next month or two? Well, we have the next FOMC meeting right around the corner, less than 13 days away. And with this, there's a lot of talk about 50 basis points right now. I personally want to put it out there that I don't think we're going to be getting 50 basis points. The markets are starting to price in that there's a higher likelihood of a 50 basis point increase than a 25 basis point increase. I think the Fed are going to pull out old reliable, another 25 basis point increase. Could I be wrong? It is possible. If I am wrong and we do get 50 basis points, that's just going to further slaughter the markets. But nonetheless, we'll have to see how this plays out. Raising the interest rates even further is going to allow, much more momentum to carry us back down to these levels. So with that being said, 16,300, if we come down and lose this level, which we likely will, bear in mind your oscillators will have probably only moved halfway down at this point where we do come down to 16,000. Then if we have an FOMC, we have a surprise 50 basis points, that is probably going to immediately carry Bitcoin beneath its bear market lows at 15,500, and this is when we're going to come down to these macro price targets that we've been mentioning on the higher time frame, like these key areas here, 14,000, candle body closes around about 12,000, huge liquidity in these markets between 11 to 9,000, which is where I think we're going. So like I said, just wanted to get a quick update out for you. And in terms of the S&P 500, let's come over to the daily time frame. You can see clearing up these Fibonacci's just quickly so you can see what's really happening right now. Since we formed these bear market lows for the S&P 500 in October, you can see, boom, we touched this trend line, boom, we touched this trend line, we broke beneath it, flipped it as resistance in the past week, and now we are melting through the floorboards. You may also notice we're falling beneath this red line with a bearish engulfing candle, taking out the lows from a couple of days ago on the 2nd of March. Now, why this is important is if we do come over here, you can see this is the most important trend line for the S&P 500 right now. This is the bear market trend line. We quite recently had a throw over from this, and now we've not only retested it, rejected from it, retested the weekly EMA ribbons, rejected from it, also retested this green trend line, this upward trend line since the bear market lows, and rejected from it. We also have this beautiful fractal that we've been talking about on the channel, where these blue lines correlate to liquidity tops, where liquidity tops out in the market. You break down, back test the 618, make new lows. You break down, back test almost the 0.5 Fibonacci, make new lows. You have a top, break back down, retest the 0.5 Fibonacci, make new lows. Over here, you can see we broke down, bounced back up, retested the top of the range due to economic data, came back down, made new lows. And over here, you can see since the top, if we come over to the daily time frame, this is literally what we warned that was literally right around the corner for yesterday. We talked about this at the end of how Bitcoin gets to 10,000. We were talking about this specific chart, and we talked about how it's very, very likely that we break down, backtest this 618, which we did. And yesterday down here, we were saying we are probably going to start getting ready for a big move back down, and that is literally what we are seeing right now. Now, outside of this for the stock market, like I said, keeping today's video nice and short and sweet, it seems like the 2008 fractal, we are starting to kind of get magnetized back to these levels where the 2008 fractal was saying that we should be. So we should be starting to play catch up very, very soon for this. We also quite recently, with these blue bars over here, we were letting you know that corporate insiders are selling. These free spikes with these blue lines, these are the spikes where insiders were selling their stocks. And as we previously discussed, insiders typically tend to sell their stocks at pretty good levels. They called the top, and ever since then, the markets have been nuking to the downside. Over here, basically on every chart, you can now see that we are losing this important trend line. Bear in mind, the trend line is in a slightly different valuation, depending on what exchange you're looking at. For the S&P 500, you can also see we also had some Fed commentary, which I did highlight quite recently on the channel. This Fed commentary came at the perfect time because we had a throwover outside of this asymmetrical triangle, and then we broke back down to the downside, retested it, and now we are absolutely melting to the downside. So pretty much all of your S&P 500 charts, pretty much all of your Bitcoin charts are looking pretty nasty right now. TIP ETF, not too much to update. We're right at the bottom of the bear flag. I'll keep you up to date if we do break to the downside of this. Government bonds are taking a slight breather today after, in the past week or so, pushing up to new cycle highs. The US 10-2, also known as the yield curve, is also having a really, really big push up today. However, on the weekly time frame, we absolutely nuked with this bearish engulfing candle. Up until today, you can see multiple bearish engulfing candles taking us down to the lowest levels ever recorded on the yield curve. And if you're new to the channel, warm welcome. We look at the yield curve because bond market traders, when they trade the yield curve, have previously predicted recessions using this inverted yield curve, and right now we are currently predicting on this yield curve that we are about to have one of the worst recessions that the US has ever seen. The VIX is pretty much coming back in a bull market like we've been talking about, up 20% over on this chart, up 16% over on this chart. And as we've been discussing, this type of move, according to the 2008 VIX fractal, is really, what we should be expecting. Something like this. Of course, I'll keep it back how it was. But nonetheless, this is pretty much what I'm expecting for the VIX. CBOE, implied volatility, or implied correlation rather, is absolutely melting to the upside as well. These are all extremely big worrying signs for the equity markets. And wrapping up on our final chart, this is actually a cryptocurrency chart, one that we warned about quite recently. We talked about last time this happened, Bitcoin made new lows 4 days ago. We also updated the Tether dominance about 2 weeks ago, and I think we've discussed this about 3 weeks ago as well. We were talking about how a bounce was incoming for the Tether dominance, and you can see this is absolutely shooting up. This is inversely correlated to Bitcoin, so the higher this goes, the more people are moving back into stables, the more people are selling Bitcoin for stables. It's really that simple. So my friends, you know where I think we're coming down to. First of all, 20,500, not really a super important price target. The most important price target we're coming down to right now is the 20,000/19,500 trend line. This is, like the S&P 500, but for Bitcoin, this was the bear market trend line that we were stuck underneath for this entire time, and we're coming right back down for it. After we do come down to this level, we do have a very important price target right here. For the M pattern breakdown at 18,700. After then, we are coming down to the Bark pattern at 16,300. And after then, it's probably going to be the FOMC meeting and these oscillators, which are extremely overextended, which are going to be taking Bitcoin down to 14,000, 12,000. We'll see you there, my friends. But for today, that's all I've got. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. And if you do want more of my posts, charts, memes, economic data, more from me when I am away from YouTube, be sure to come and follow me over on Twitter at 618_cowboy. For today, that's all I've got. Hope you enjoyed the update. As always, it's been your boy Cowboy Trades. I'm out. Peace.